ULTY is the YieldMax Ultra Option Income Strategy ETF, and it really hasn't been doing too well. Now the question is, do we move some of the money out of ULTY into some of the newer products, KYLD by Kurv Investments, or even the new one ULTI by RexShares? Now if we take a look at ULTY's price history, we can see it's down 9% in the past month, which isn't great considering the Nasdaq is actually up almost 5% during that same time frame. So we can see it does have the NAV decline, and even though it doesn't track a specific index like the Nasdaq 100, it is going to have some pretty speculative tech holdings. And if we take a look at some of the holdings, we can see you're going to have very speculative and volatile companies such as Rocket Lab, Robinhood Markets, Coinbase. We even have Palantir and Hims and Hers Health. So that's something to keep in mind. Do not invest in any ETFs where you don't agree with the holdings. Now, of course, the holdings in these actively managed ETFs are subject to change, and hopefully does change based off of market conditions, but we have to, as income investors, monitor our own investments and see what they're doing in terms of strategy or holdings. Make sure it still aligns with your goals, and don't be afraid to sell out of an ETF if it's not performing well or you don't agree with the direction they are taking it. So now we have two new ETFs that are released. The first one is the RexShares Income Max Option Strategy ETF, ULTI. Now this is pretty funny. They have named their ETF pretty similar to YieldMax's ULTY and just making it an I. So it is going to be a direct competitor to ULTY, and RexShares really wants to make that known that they are directly competing with that ETF and hopefully bringing some of that market share from YieldMax over to RexShares. Now this fund is very new. It just came out on Halloween, October 31st, but it's going to have a similar strategy setup. You're going to have those weekly income potential, actively managed, and quote-unquote downside mitigation on extreme moves. Now, a lot of people have this misconception of the hedging, the downside protection. You're not going to have any NAV decay. That is not the case, because in order to get to that protection, they are buying put options, which does cost some of the premium. So if the stocks does end up going, let's say 30% down, you're not going to see that with the ETF, but you are still going to lose some of that NAV, which is something to take in mind. And in bull or flat markets, it is going to eat into your option income a little bit, because you have to buy and pay a premium for those put options. And if we take a look at the expense ratio, very similar to ULTY at 1.25%. It is quite high, but we don't know exactly how it's going to perform. Maybe this could be a ULTY killer, and it could be a great performer. Now we really want to see this ETF have good stability. That is why a lot of people are not really happy with ULTY. It's kind of been all over the place. We've seen some pretty steep declines. It's right now under $5 per share. A lot of people are not really happy. They're looking for other options. Other ETF providers see this. People are not happy with this ETF, and they're coming out with their own products, as we see with ULTI by RexShares. Now, if we take a look at ULTI's holdings, which is very important, you want to check out the holdings, of course, with any ETF. You want to know what you're putting your money into. We can see it has no more than 5% into one holding at the moment, subject to change, of course, but right off the bat, we're seeing a lot of companies that I haven't even heard of. So I haven't even heard of Sour Therapeutics. We have Gemini Space Station, Core Scientific, Solar Edge. We do have Trade Desk, Figma, Upstart, Rare Earth Inc. So a lot of speculative, volatile companies. We can actually download the PDF to see the whole exact strategy and holdings right here. And we can see a bunch of holdings. They also have Lemonade, Applied Digital. Right off the bat, I'm not a huge fan of these holdings. They're not really big companies, very, very speculative. So I think in their strategy, they're going to be a little bit more aggressive. These are hand-picked stocks, mind you, so they are anticipating that at least in the short term, they are going to rise in value, which in turn is going to do well for this ETF. But we can see they have all their call options that they are actually buying, because remember, when it's a positive percentage, that means they're going to be buying. I actually like that they have this nice PDF file. It's very easy to read what exactly they have. Very transparent, which is a very good thing. You want to know what you're putting your money into. So they have a lot of call options they are buying on their holdings, as well as some put options we see. And then we scroll down, we can see when it gets to the negative percentage weightings, that is going to be these options that they are selling, which is going to help bring in that income premium that we know and love. So right off the bat, they're selling calls, they're selling puts, they're buying calls, they're buying puts. That is basically what's known as the iron condor strategy, which is very interesting to see that they are taking that approach. Now, of course, this is subject to change based off of market conditions, but that is what they're doing right now as they anticipate the market conditions. And we can see the share price for ULTI. It started out as $26 per share, and it pretty much traded pretty flat for the rest of that first trading day. Now, we're not going to be getting any distributions next week. I believe it will come out the following week. So you have to keep in mind that the first distributions for these ETFs and most newer ETFs do take a little bit longer to get those first distributions. But after that, it's going to pay out every single week. And then we have the Kurv High Income ETF, KYLD. It has a lower expense ratio than the other two at 1.16%. And it actually has a waiver, so we're going to be getting a 1% expense ratio at the moment. And of course, weekly distributions. Now, there's not much to be said about this ETF based off of their fund page on their website, but the potential benefits of this ETF is going to offer a recurring income stream to the shareholders in the form of weekly payments, and you're going to gain exposure to a portfolio of high growth securities. And of course, it does mention it has a tax advantage, which it states option premiums may not be immediately taxed and therefore has the potential to offset short-term tax liabilities, also known as return of capital, which is very common with option income ETFs. You're pretty much just deferring your taxes. You will have to pay those taxes later, but not at the moment. And taking a look at their holdings right now, they have some pretty big name companies. Actually, a bigger fan of the holdings in this ETF than the other two, ULTY and ULTI. It has Teradyne. I'm not too sure what BWX Technologies is, but they have Broadcom, they have the Gold Miners ETF, they also have the Silver Miners ETF, because precious metals have been on a really good bull run lately. We have an aerospace company, Robinhood Markets, we have Intel, and we have Shopify. So we have some recognizable names compared to the RexShares one, and especially compared to ULTY. So I'm a huge fan knowing that there's some reputable companies in this list. And it looks like they are going to be taking a little bit more of a conservative route. RexShares is trying to be a little bit more speculative, and that could come with a little bit more risk. KYLD may lower their income yield in exchange for some NAV stability, because that is what people want with ULTY competitors. They want an ETF where the NAV is stable, also appreciates in price, but it also isn't investing in meme companies. And we can actually take a look at the option strategies that they may or may not be employing on their holdings. So of course, they're going to have covered call writings. All of these ETFs hold the underlying shares of the stocks. And then we also may have uncovered call or put writing, which is very interesting. And that could introduce a big part of risk if the underlying stock make a big swing in the market. And then we also have call or put spreads. That's not anything unusual. ULTY by YieldMax also employs a spread strategy, and it's basically writing or selling a call and buying a call at the same expiration date, either on the call side or the put side, in order to create a spread. which is going to seek increased participation and potential appreciation of an underlying listed security's share price. And then we have some more complex option strategies. We have risk reversals or protective collars. And then we have protective puts. They've learned this from ULTY's YieldMax. Buying those protective puts as insurance is very key to these ETFs. Even though the fund may drop 5% in a day, it's not going to drop 100% if the underlying companies end up going bankrupt. And of course, it may buy some long calls if they are bullish on an underlying in order to gain that growth that people want to see. So it looks like KYLD was also trading at $26 per share. So it's very similar to ULTI in terms of the share price, and it has very similar volume. That Friday also, it seems like a lot of people were buying both of these ETFs. They're very new, came out October 31st, Halloween. So the strategy here would probably be not getting into these immediately. You want to see what's exactly going to happen in terms of distribution rate. We have no idea what the distributions are going to look like, or if it can handle NAV stability. How is this ETF going to perform in a bull market? Is it going to grow in price? That's what we want to see. We know with WPay, a lot of people have loved this ETF because it does have that share price appreciation. We can see it's up 6% since September, which is absolutely good, and you're getting weekly distributions on top of that. So a lot of people right now have actually transitioned to WPay, but could these other ETFs by these other ETF issuers follow that same path, have some growth potential as well as weekly income, and have NAV stability? You don't want something that's always depreciating in price. It's a little bit scary, and you always have to constantly reinvest in order to get a positive total return. So let me know down in the comments what your thoughts are on KYLD or even ULTI. Are these going to replace ULTY by YieldMax? A lot of people have not been happy. Are you been happy? Let me know down below.